weekend all. Ira Epstein, and here we are with your weekend edition of your financial market wrap-up in the futures. And this is for Friday, September 15th, 2023. Now remember, what we do here on the weekend, we focus on the weekly chart. We're not looking at the fundamentals, but I always like to start off talking about them. This was a week that, if you put me in a room with economists, educated as can be, guys that big names, how could anyone say the data that's coming in isn't strong, hot, any way you want to call it? And does it deserve, if the Fed is data dependent, going another quarter point? Yes. But what they'll say instead is that, yes, it is, Ira. Oh, I got the yes. However, I think the Fed can afford to sit back and say, well, maybe we should give the market a chance. Okay. Haven't we been doing that? We've been raising rates right on through, giving the market a chance. We've already had one pause, and the data's staying strong. But if you wait long enough and you hope and you cross your fingers, maybe it will weaken. Of course, we do have the end of the year coming up. By the way, isn't this the weakest month of the year for the stock market? Today was the first serious break we've had. But what was today? Let me think about it. It was the anniversary of Lehman Brothers going down, but no, that's not it. Triple witching. I forgot about that. So we were done with the futures, so you don't have your S&P, the Septembers. You don't. We're into the Decembers of even the currency markets. Option expiration gone. I don't know that option expiration is as big a deal as people want me to think, because you have these options that have overwhelmed the market, these one-day options, if you will. And if you look at 1 o'clock each day, these things create in the marketplace a bump, one way or the other, a bump, a decline, as they seem to reprice themselves. It's a fascinating event. Again, the exchange has created a casino, and you can bet, hey, it's up or down for the day, over, under. Think of it that way. That's how I look at it. Okay. And there's nothing wrong with that. That's just another thing. So what we did have, though, is we have now seen the United Auto Workers go out, but they did it smart. Instead of 146,000 workers going to break their fund, because you put them all out, you'll be out of money in no time at all. How are you going to give them the measly $500 a week to survive? Those that are on strike. So they did 12,700 to hurt the most profitable plants, and they'll ramp it up. They will ramp it up, because that's what you do to put the pressure on the auto companies. The auto companies will look at it. They'll say, oh, we've given the best deal we have. You know they can do more. If you're negotiating, the union's asking for the sky, and there is no way the auto companies are coming in at where they think they'll end up. They're coming in at a lower number. Both sides have to come together. We are seeing that, I hope, play out with the Writers Guild in Hollywood. I understand they're back to talking. You know, let's get something good going here. It's got to come to an end at some point, because you're breaking the writers, you're breaking the people that make movies, all the little companies that support them. Everybody's in a lot of pain, all right? But I understand the battles. Both sides got to figure out where the pain comes in, and at the end of the day, when they reach their agreement, guess who pays for it? Guess who's going to pay for this auto strike? It isn't the companies, fools. It's you. Go out and buy a new car, you're paying for it, because they're going to reprice things in order to do this. There's no other way. They got to pass it on, because they got to protect their stock shareholders. They got to have a dividend to pay them. That's how things work. That's how things work. Okay. So when we look at the S&P on a monthly basis, this is a big, broad monthly thing. You don't even come down and test support till you're at 41.25. As long as the market is over that, my bias is to the upside. I carry that the same way when I look at the weekly charts. As long as the market stays over that, my filter is that the market has still got a bullish bias. Close under 44.30, let's call it 44.29.65, boom. Then I have a bearish bias, and any sell signals I get kick in. When we step over and we look at a current chart of the S&P, we've gone into a pause. I can't call that a bear chart, just looking at it. We've been coming up and we've sort of paused right here. But when you get into the little nuances of it, it could be. You've got on a swing line study. What a swing line does, this brown line. I created it 25 years ago for my son because I wanted him to be able to walk in anywhere and on a chart just like this, take it and tell people where. Just looking at that chart, are we in a downtrend or uptrend? What's the pattern? He could say, Dad or friends, we have higher highs, higher lows, lower highs, lower lows, or no trend. If you think you can do that, great. I don't think you can. But I taught him that with this indicator, you can. And the indicator looks at 5 things. You have an inside day, you have a higher high day, a lower low day, an outside day up, or an outside day down. I created the rules, created the indicator, and I put it on the chart. For me, it's one of the things I look at. Short term, nothing else. You're in a downtrend. By the definition, lower highs, lower lows from a charting point of view. Now you start filtering that. You look to see where the market's at in relation to key averages. I use the 18 weeks. Some people use the 20. It doesn't matter. When I look at it, the bias is up. How do you get bearish? I get bearish on the chart on any close under 44.29.50. You always round. You can round it up to 75, down to 50. You do your thing. That's what it's going to take to get under that, okay? At that point, I'm in the bear camp. And I stay in that camp unless you take out 45, 47, 75. Let's flip this around. In order to get bullish, I have to get over 45, 47, 75 without coming out and taking out not this week's lows, last week's lows, no, this week's. As long as this week's low is not taken out, if you were to go straight up, I could end up with higher lows. If you take that high, a higher high, and I'm back in an uptrend. So I can define the parameters of the market. Number 2, if it were to go up, where's the top side resistance? Right up here. Number 3, what is the tendency of the month of September? It's traditionally the worst month of the year for stock indices. Does that mean anything to me? Nah, I certainly wouldn't play it, but I keep it in the back of my mind. What else is happening? We have an FOMC meeting coming Wednesday. The market wildly anticipates that the Fed is going to do nothing. What if they go a quarter point? Does that upset the apple cart? You answer that question. Momentum, down. So it's very easy if this market for me closes under 44, let's call it 29.50, that I'm opening the door for a retest of 4,200. Don't do that. Stay like this, the bias is up. In the Dow, it is so similar. If you take out last week's low, be careful. So if you took out 34,317, I would then have a pattern, potentially, of lower highs and a lower low. If the market goes up, doesn't matter. It's already in a buy mode. You have the higher lows, the higher highs. This is very different than the S&P, but I said something that isn't true. You have higher lows. You don't have higher highs. You have a lower high, higher low. So you have a sloping down from highs. You have coming up from the lows. You're coming into a wedge, a triangle. Think of it that way. And which way it breaks out is going to give you the story. If you take out 35,177, the initial reaction's bullish. If you go under 34,317 without taking that out, my reaction is bearish. I'm right at a cusp. When I look at the NASDAQ, it will take a close under 15,095 to get me bearish. I have the lower highs, but I have higher lows. You do see that. So crucial time. All of the indices are at a crucial time right now, those three. What about in the Russell? Well, the Russell's already got problems. It's been unable to stay over the 200-day average in gray. The red is the 18-week average. These are all averages of closes. Resistance showed itself very clearly at the 100-week average. You got over it for about 4 weeks, then you fell back under, and now it's the resistance again. To get bullish, let's look at it both ways. You'd need to get over 1934. That would make it bullish. Momentum, however, is dragging the market lower. What turns the trend down? Take out 1832.80, and you already have lower highs. That would give you lower lows. You'd be opening your door for 1766, another market right at a cusp. In the notes and the bonds and the 10-year notes, guess what? They're embedded. They are staying bearish. They don't care that the public, the Fed watch page all says the Fed's going on hold. These just keep breaking out to the upside in yields. Take a look at your 10-year. You're over 4.3. So everybody says, oh, that's the disaster number. You're there. Now, admittedly, the lower Bollinger Band, the first spot to take profit, is the black band here. You'd have to get me think you're out of the bear camp. You need the red line to close over 21 at the end of the week. It's 1457. Until that occurs, if you've taken my enhanced Bollinger Band course, there's a way that you're getting short this market. You can click up here, by the way, at any time. It'll take you to that course on our website. It's iraepstein.com under the word education. And I'll have an ad on it right at the end here as well. But you can always click up there. Remember that. In the dollar index, overbought, but in an uptrend, coming into a serious resistance spot of the upper Bollinger Band. The odds of staying over the band or under it are only 5% of the time. This is a market that can ride the band and get over it. It's done it, but it will stay only 5% of the time, all right? We're coming out of sideways action. A lot can go on in this market. This is set up that if it wants to keep going higher, believe me, the setup is there to do it. Just convert this to embedded, just the way you did back here. See how it embedded, and away you go. That's what I'd be looking for. So very important week coming up. Eurocurrency, you're just oversold. I would say that the 105.80 area is a good support zone, or wherever that Bollinger Band comes in. It'll drop come Sunday night. The way the setup is, the momentum, I know the formula, it's going to be dropping a bit then. It's still bearish. In the Canadian dollar, oversold market, didn't have the power to get down to the lower band just yet. The trend is down. You negate the downtrend. You don't get bullish, but you negate the downtrend. If you take out 2 weeks ago high and you go right back down and into the potential here of the Bollinger Band, as long as you don't take that out. Got it? But you're oversold. I don't think you're going to attract new money. You'd either have to embed or do something. I've told you the market doesn't believe anything the Bank of Japan is saying. All they do is talk up or try to talk up their currency. Does it look to you? Look at the Bollinger Band. I mean, the slow stochastic. I want you to look at it. The momentum leads the market. I know people don't get that. Price doesn't lead the market. Most times, my experience has been that momentum leads the market ahead of price. You just keep dragging. And notice how neat it is about it. It doesn't close under the Bollinger Band. It just goes down to it and keeps dropping forever. I know people that just buy these things to go, the bank's going to do something. Of course, they wipe themselves out. You know, that's not what you do. It's not how you trade. You want to be with the trend. Bitcoin, the trend is down. The resistance in the market is back at a combination of 27,740, 27,990, let's call it. That's the 18 and the 100, I'm sorry, the 200-week average. The 100's in the green. It's the 200. So it's oversold as can be and not embedded. I don't think you're going to get aggressive defense by the bears of that number. Oversold is one way to say it's had its thing. It either embeds or let it correct before I want to get back in and trade the downtrend. In Brent versus WTI, as long as it stays like this, all ships rise. So the differential between the two not there. Today I heard on CNBC finally a person come out, an economist like me, attacking President Biden. I was pleased. And what did they bring up? He didn't do what he promised on the SPR, Strategic Reserves. He doesn't have a real energy policy. I was listening, I'm going, she must be listening to me. And you can see you're just running this. You have an embedded reading. Breaks will be bought, not sold. Until the market sees a red line under 79, as far as I'm concerned, you want to be a buyer. You're waiting for setups. Same thing on WTI. He was supposed to buy $25 ago almost. Remember that. And he had the price. You do know that. He said between 67, I'm talking Biden, 67 to 72. He had a great analyst that pinpointed that. He blew it. He and the energy secretary, who's in hiding, you never hear from her. She should be fired. She's not a secretary of anything. I don't know how to say it except incompetence. That would be a good word. Lower highs, lower lows, just fighting right through here. You put it together, you get a game plan. And that's what trading is. Investing is the same thing. If you're an investor, who cares what the chart is doing? You're doing your homework. Warren Buffett's a great investor, right? If you're a trader, you're doing it different. You're using, be it the leverage of the market. You don't have to go on leverage. If you're a spider stock trader, you don't have to do it. Futures, you do. If you use a futures contract, the only way to take out the leverage of the market is to put the full cash value of the contract in your account and just trade it. You'll never have a margin call because you paid for the whole thing. Got it? And you're trading it or investing in it, whatever you want to call that you did. That's not what most people do. I believe that the indicators I'm showing you here can change some of the patterns you work with, maybe for the better. Remember what I said, you can click up here at any time. It'll take you to the Enhanced Bollinger Band course. Look at this ad, take advantage, teach yourself, get the education. Maybe you make yourself a better trader. I'm Ira Epstein. You have a good day. Welcome. I'm Ira Epstein, and I'm here to talk about my Enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.